What's going on, everyone, and welcome back to another episode of Stock Watch, the series where we watch stocks and stocks watch us. And today we're going to return to the S&P 500 from Vanguard and see how it's performed over the 1 week period. So, in the first episode, the S&P 500 was at 285 flat. So now it's at 288 and 88 cents for a net profit of $3.88 at the moment per share. So basically, for the second episode, I'm going to try to overview some of the pros and cons of the stock and my sentiments after 1 week. So my plan right now is to hold off from buying any more S&P 500 shares until there's some kind of a market correction or dip, just because this stock has been continuously climbing and it hasn't seen any kind of correction, no significant dips, and we've just been on such a long bull run where eventually the prices are going to have to go down. So I'm going to try to wait for the dip. If not, I'm still going to stick to the dollar cost averaging, where I buy one stock per month, but I won't be buying multiple shares like I did with VGT. So at the moment, it's a bit high for the valuation, and I'm going to stick to one share a month unless there's some kind of dip. And moving on to the pros and cons of this stock, starting off with the pros. The S&P 500, because it's an ETF, it's generally safe, and it's going to have steady growth. Over the past years, like you can look at the 5-year growth chart, it just has constant growth. Same with the 1 year mark, it's just very safe, and it's just going to keep going up for the most part. Just leave your money, hold it for the long run. Don't try to swing trade or try to beat the market. Just buy your shares, hold it for the long run, and take the money when you absolutely need it. But yes, as an ETF, it's generally safe and it'll experience continuous growth for the most part. Of course, there's asterisks or some other things that could happen, but it's one of the safer stocks out there. So cons is that it's a bit on the expensive side. You're paying almost $300 for a stock that's giving you, let's look at the 1 year, $37 in return, which, that's nothing to laugh at. It's still a really decent return. But compare that to like a small cap company where you could be making hundreds of dollars per share, like per year, then, you're not getting as big as a return as other stocks. But then those stocks that I previously mentioned, like let's take Uber for example, like there's more room for growth, more room for higher returns, but it's also a riskier stock because it hasn't really been established and it doesn't have the market value behind it. Meanwhile, the S&P 500, which has been around for years and has shown that it's resilient to plenty of things like market crashes, this stock is going to be valued more just because it's so much safer. So that explains the hefty price tag on it. And then the other downside that I briefly talked on was the slow growth. So it's just not going to grow as fast potentially as other small cap stocks. Well, and I forgot my final point, which is because there is constant growth, as you see in the chart here, it's hard to find a buy-in point. Like right here would have been a decent buy-in point. Same with this dip here. Same with these 3 dips, or this section and this section here. But overall, like, you see these dips are spaced months apart. And in this moment right here, we're at this section. I don't know if we're going to have a repeat of this right here, where it's just continuous growth for months upon months, or if there's going to be a dip around the corner, which is why I'm going to do the strategy of the dollar cost averaging. But still, like, it's hard to find a buy-in point just because of the slow and steady growth. So now the video is going to be wrapping up, and I'm going to just talk about my sentiments after 1 week of owning this stock since my initial video. And I still think it's a very great stock to own. It's a very strong stock, and it serves as a good foundation for a portfolio. I still want to buy more shares because it's just such a strong stock that although it's not going to be giving you the most return immediately, over the long term or the long run, you're just going to have a safe bet here. And at the moment, it's my second favorite ETF, right behind this one, VJT. And this is why I have 8 shares of this one, but it's right behind that one. I do want to buy more from the S&P 500, but as an ETF, you're getting a very safe stock. You're going to get returns on it, and it's going to be slow and steady growth. You're going to see plenty of green days with the S&P 500. So far, one weekend, it's my second favorite stock, as I already said, and I really love it. It's a great stock that I'm going to be buying more shares of. So I'll come back to you guys in 1 month and share how I feel about it then. Thank you all for watching, and I hope you have a wonderful day.